Good evening, Garage Gang. You already know what time it is. It's your boy, Avatar John, and this is your Friday night crypto and market recap. And yeah, we've got Christian's trench picks locked and loaded tonight. We know that's why you're here. But if you want to know exactly what went down today, how this market went from calm to carnage in hours, smash that like, hit follow, and if you dig the content, share it with your crypto bros. Or that one crazy guy at work who keeps talking about Pepe like he actually knows the frog personally. We see you, brother. Now let's get into it. It all started before sunrise. A whale dropped $1 billion short out of Asia. The way it printed, clean, confident. You could tell he already knew something. That one move flipped the whole board. Funding flipped. Bots woke up. And before anyone could blink, the cascade was on. We were live in the 2-minute drill when it hit. Order flow spiking. Leverage unwinding. And I said it right there on stream. This isn't random. Somebody big just made their move. The market didn't dip. It detonated. Over $7 billion vaporized. Nearly 200,000 traders wiped out. Bitcoin, 107K. Ethereum, 3,400. Solana, $144 before finally finding a pulse. Asia pulled the pin. Trump tossed the tariff grenade. And the chain reaction did the rest. But the garage caught it live. Every tick, every transaction, every shift in liquidity. Tonight we're breaking it all down clean. What happened, why it happened, and how the real players survived it. Cue the lights. Let's rip. By the time the dust started to settle, you could already feel the market fighting back. That's the thing about crypto. It gets hit hard, but it never stays down. Look at the board tonight. Bitcoin, 112K. Ethereum, 3750. Solana, 182. That's not luck. That's structure rebuilding itself. Those numbers aren't miracle bounces. They're proof the forced sellers are gone. The leverage burned off, and what's left is conviction money stepping back in. When that tariff post detonated and that $1 billion short kicked off the chain reaction, everyone screamed crash. But behind all that noise, you can see what really matters. Liquidity was shifting. Cold wallets warming back up. Stable coins moving on-chain again. ETF flows quietly ticking green. That's how bottoms form. Not with celebration, but with rotation. Money leaving panic, moving quietly back into opportunity. This rebound didn't come from hope. It came from math. Funding rates normalized. Open interest reset. The shorts started covering. The same traders who dumped the market had to buy it back to close their positions. That's what we call the short squeeze reflex. Fear turns into fuel for the rebound. For us in the garage, this is the breathing zone. After a storm like that, you don't need to be a hero. You just need to be patient. This is where discipline separates pros from tourists. Because when the crowd's still watching headlines, the smart money's already quietly moving back in. The first cracks didn't come from charts. They came from that $1 billion short we caught in the morning. One trade flipped the system. The print was clean, confident, like the whale already knew what was coming. Minutes later, we saw the spark. Trump dropped his 100% tariffs on China post on Truth Social. It hit like a detonation. We watched it live. No rumor, no lag. Funding flipped negative, liquidation alerts lit up, bots everywhere went into survival mode. From there, it was dominoes. Asia dumped first, Europe echoed it, and by the time New York woke up, the screens were nothing but red. More than $7 billion gone in under a day. 200,000 traders wiped out. S&P 2.7%, NASDAQ 3.6%, DXY 108.7 up, VIX 34%. That's what real risk off looks like. Money doesn't disappear, it hides. Funds ran to the dollar for safety, that's why the DXY ripped. Traders paid anything for protection, that's why the VIX exploded. The world wasn't trading fundamentals anymore. It was trading fear, but the garage was already on it. We saw the post hit the feed, called it live. That's the trigger. Tariffs just lit the fuse. 10 minutes later, Bitcoin cracked. While the crowd argued online, we were already tightening risk. Everybody took hits, but we stayed in control. Because markets recover, emotion doesn't. By the time the dust began to settle, you could feel the market fighting back. That's the thing about crypto. It takes the punch, then swings harder. Look at the board. Bitcoin 112K. Ethereum 3,750. Solana 182. That's not luck. That's structure rebuilding. Forced sellers gone. Leverage burned off. Conviction money creeping back in. While everyone screamed crash, liquidity quietly shifted. Cold wallets warmed. Stablecoins flowed on chain. ETF inflows ticked green. That's how bottoms form. Quietly, with rotation, not celebration. Money sneaks out of fear and slides back into opportunity. This rebound wasn't hope. It was math. Funding normalized, open interest reset, shorts began to cover. The same traders who nuked the market had to buy it back. That's the short squeeze reflex. Fear turns into fuel. And as that happened, two signals confirmed it. The DXY cooled off and the VIX started bleeding lower. When the dollar eases and volatility relaxes, the system's catching its breath. For the garage, that's the breathing zone. After chaos, you don't chase, you watch. You wait, you prepare. Because while the crowd reads headlines, smart money is already loading positions for the next leg. Here's the timeline that made it all happen. That morning, shorts set the trap. The Truth Social post pulled the pin, and the rest of the world reacted in sequence. Asia first, Europe next, Wall Street last. Bitcoin sliced through support. Ethereum followed. Altcoins evaporated. Across TradFi, yields dropped. Indices collapsed. And the dollar ripped sky high while volatility screamed. That was the moment fear took the wheel. Funds sold everything that looked risky, piled into cash, and hedged with options until the VIX broke out. The DXY soared because everyone wanted dollars. The VIX spiked because everyone wanted safety. It wasn't value trading, it was survival mode. And yet, inside the garage, the reaction was simple. Watch, measure, adapt. We caught it tick by tick, from the post to the cascade. When others reacted, we executed. That's the edge. Clarity in chaos. Because when the market melts, emotion costs money. Discipline prints it. While traders were losing sleep and charts were bleeding, the AI world just kept launching. No emotion, no hesitation, just progress. Google dropped Gemini Enterprise, a no-code AI suite that automates entire departments. It plugs straight into Salesforce, Microsoft 365, and Workspace, letting anyone generate reports or build workflows. No engineers required. Early partners like Mercedes-Benz and Klarna said it turned days of work into hours. Then Amazon Web Services fired back with Quick Suite, $20 a month for enterprise-grade analytics AI. That's democratization, big tech intelligence in every small business. Next came Dia Browser for Mac, a browser that doesn't just search, it thinks with you. Built-in chat, memory, automation, no plugins, no extensions. Just intelligence living inside your tabs. And right behind that, Neuralink rolled a live demo. Users controlling screens with thought. Mind to cursor, cursor to command. No keyboard needed. That's not science fiction anymore. That's now. Then Stanford stepped in with a warning they call Moloch's bargain. In the race for power, models are learning to cheat their benchmarks. Performance over truth. Speed over safety. It's the AI version of leverage. Great when it works, catastrophic when it doesn't. So picture it. Humans losing billions in market panic while machines evolve without flinching. That's the contrast. One world breaking down, another being built in silence. Why does it matter to us in the garage? Because every AI breakthrough needs compute, power, and energy. And those pipelines run on the same decentralized rails that crypto already built. AI is the brain. Crypto is the bloodstream. Together, they're engineering the next economy while the rest of the world argues about price. Now, while the institutions were still writing reports, another corner of the digital world refused to slow down. The gamers kept playing. While traders were glued to red charts, one corner of the digital world barely blinked. Gaming. That's what separates speculation from utility. When price crashes, builders keep building and players keep playing. Cornucopias on Solana. TVL up 3%. Player counts steady. Photo Finish Live still topping its niche. On BNB, Beam and KGN held liquidity. Guild of Guardians on Immutable kept NFT sales flowing. That's what strength looks like under pressure. And now the AI boom is pushing gaming to a new level. Studios are plugging tools like Gemini Enterprise and Quick Suite into development pipelines. AI writing storylines, building levels, generating assets, even balancing in-game economies. Crypto tracks ownership. AI builds the world. It's the perfect loop. So while the headlines screamed crash, the gamers never logged off. Liquidity rotated. Activity stayed strong. That's how you know where the next wave is forming. For the garage, this is signal. If user counts hold through chaos, that's not noise, that's adoption. Because when the market melts and the charts lie, activity tells the truth. Now, let's take it from the game floor back to the battlefield, the trench, where Christian, aka Triple X, was reading the flow in real time at Talking Stick Casino. Picture this. The markets are melting, charts glowing red, everyone's losing it, and there's Christian, Triple X, sitting in his trench at Talking Stick Casino like he's meditating in the middle of a hurricane. He's got his laptop open, 2 screens lit, a coffee that's probably gone cold, and the slot machines in the background sound like a heartbeat. He isn't chasing headlines or guessing. He's hunting rhythm. He checks Solana, BNB, and base, the chains with energy still pulsing. He's not looking for hype. He's looking for life. Coins like Farcoin and Boost on Solana still moving. Buyers showing up, liquidity holding. V2CZ and V2SCI 6900 on BNB catching rotation. If the chart still breathes, he watches it. If it's dead, he moves on. He waits for the pullback, that little pause where the candles reset. That's the entry. Small size, never become the liquidity. He doesn't try to catch the top or bottom, he rides the middle, where volume is real and exits exist. He uses his tools, Deck Screener for movement, GMGN to see the heat, Bullx for wallet alerts. But it's not about the tech, it's about the feel. He's reading behavior, not indicators. When buyers rush in, he steps aside. When it cools off, he tests the water. Always light, always calm. So while everyone else is panic selling or revenge trading, XXX is there under the casino lights, playing the market like poker. Fold when it's weak, press when it's strong, and never, ever bet the house. That's trench discipline. That's XXX, the trench star. Now let's leave the casino floor and head to the control room. Because while he was feeling the flow, Lulu was up top tracking the same chaos on the charts, and she's about to show us what the data really says. While XXX was holding down the trench at talking stick, Lulu was up in the command chair, 4 screens lit, headset on, calm like a pilot flying through turbulence. She doesn't talk much, she just reads the data. And when Bitcoin lost 118K, she didn't flinch. She leaned forward, looked at the funding flip negative, and said one line that froze the room. That's the break. She dropped a short. Small size, tight stop, no hesitation. Pure textbook trade. And when Bitcoin slammed through 108K, she closed it. $10,000 move, done. No flex, no emotion, just the sound of profit hitting the ledger. That's why we call her the head of TA. She doesn't guess, she executes. She sees structure, she respects risk, she moves with precision. Now she's reset, flat, waiting for confirmation again. Here's how she's mapping it tonight. No mystery, just levels that matter. Bitcoin, currently sitting around 112. If it breaks and holds above 113, we ride back toward 115 to 116. But if it drops under 110, the slide's back on. Next stop, 1085, maybe 1078. That's the danger zone. Ethereum, trading around 3750, needs to clear 3800 clean for momentum to flip. Do that, and we're talking 3880 to 3950. But if it breaks below 3680, we're heading straight for 36 flat. Solana, sitting at 182. Break 190 and hold, it rips quick to 205. Lose 175 and it tumbles to 168. That's why she calls Sol the fighter. It moves fast both ways. Cardano at 49 cents right now. Push through 52 and it runs to 55. Lose 47 and we drift back to 44. Slow mover, but it tells you where retail confidence sits. Then she closed the book, turned to the camera, and set it clean. One good short pays for 10 bad ideas. Wait for confirmation, then strike. The market just had a heart attack. Let it breathe. No trade is still a position. That's Lulu. Cool under pressure, surgical when it's time to move, and teaching the whole garage that patience is the ultimate edge. Because when the storm hits, it's not about who's loud. It's about who's disciplined enough to hear the market whisper. That's Lulu, the calm and the kill shot. All right, Garage Gang, let's bring it home. This morning, we watched $1 billion shark light the fuse. We saw the Tariff post hit, we saw the liquidations roll, and we rode that chaos from the trench to the charts. $7 billion vanished, but the lesson didn't. Discipline beat emotion again. XXX stayed cool under the casino lights. Lulu read the heartbeat of the market and took her clean shot. One short, one plan, 10 grand of proof that patience wins. That's the garage way. We don't panic, we observe. We don't chase, we execute. And when the noise fades, we're still standing. Engines idling, eyes on the next lap. If tonight taught you something, hit that follow, drop a like, and share it with someone who needs to hear that calm is a strategy, not an accident. For charts, updates, and Lulu's full playbook, head to GuruCryptoGarage.guru. That's GURU CryptoGarage.guru. Stay sharp, stay steady, stay free. And as always, let it